Hey everyone, the 2026 tax season is officially here, and in this video, I'm going to give you an overview of the major deductions and credits in a way that's easy to understand. After each topic, I'll also include a slide with additional details, so feel free to pause the video if you'd like to read them. I want to start with the increased standard deduction, which got a massive boost for 2025. It's called the standard deduction because most taxpayers qualify for it, meaning this probably applies to you. For single filers, the standard deduction is now $15,750. If you're married filing jointly, it jumps to $31,500. And for head of household filers, it's $23,625. This means you won't be taxed a single penny on at least the first $15,000 you earned last year. Pretty cool, huh? But it doesn't stop there. There's also an extra standard deduction for seniors this year. Seniors can add an additional $6,000 to the standard deduction per person, or $12,000 per married couple. Do you think I could trick the IRS if I redid my last year of high school? Alright, just kidding. But in all seriousness, here's some extra information on the standard deduction. Now let's talk about 3 new deductions that recently went into effect with the One Big Beautiful Bill. These are especially exciting because you can claim them even if you don't itemize your taxes. First up is the no tax on tips provision. Workers can now deduct up to $25,000 of qualified tip income. The IRS has a specific list of 17 professions that qualify, so you'll want to double check before claiming it. Here's the additional information on no tax on tips. Second is the overtime pay deduction, and this one is huge for those that qualify. Certain employees can now deduct up to $12,500 of the additional overtime portion of their pay. Now, please note I said the additional overtime portion of their pay. That means if you're earning time and a half, you can only deduct the half portion above your normal rate. Here's some additional information on no tax on overtime. The third major deduction applies to those who took out a loan to purchase a new vehicle in 2025. You can now deduct up to $10,000 in interest on your auto loan, as long as you purchased a new vehicle for personal use that had final assembly in the United States. Here's some additional information on the no tax on car loan interest provision. Next, let's talk about some big news for people who itemize their deductions. For years, the cap on state and local tax deductions, often called the SALT cap, has been a major pain point for taxpayers in high-tax states. But this new bill increases the limit quite a bit. Taxpayers can now deduct up to $40,000 in state and local taxes. That includes things like state income tax, real estate tax, and personal property tax. That means if you pay $1 in state and local taxes, you won't be double taxed by the federal government. Here's some additional information on the newly increased SALT deduction. And while we're on the topic, don't forget about the other itemized deductions that are still available. You can still deduct mortgage interest on your primary residence, which is a big benefit for those with a mortgage. You can also deduct charitable contributions, as long as they're made to qualified organizations and you have proper documentation. You can also deduct medical expenses that exceed 7.5% of your adjusted gross income. As a quick reminder, taxpayers should always compare if they're better off itemizing or taking the standard deduction. You can only take one or the other. Last but not least, let's talk about tax credits. Tax credits are even better than deductions because they come straight off your tax bill. If you're in the 22% tax bracket, a deduction only saves you 22 cents on the dollar. But a tax credit, on the other hand, saves you the full dollar of the credit. One of the most powerful credits for low to moderate income workers is the Earned Income Tax Credit, or EITC. For 2025, the credit is around $650 if you don't have any qualifying children. But it scales up quickly from there. If you have one qualifying child, it's up to $4,300. For 2 children, it's over $7,000. And if you have 3 or more children, the credit can max out at over $8,000. And here's the good thing to know about the Earned Income Tax Credit. It's refundable. That means even if you owe little or no federal income tax, you could still receive a credit as part of your refund. Speaking of kids, the Child Tax Credit also received a boost this year. For 2025, the credit increased to $2,200 per qualifying kid. That said, there's still income limits and phase-outs to be aware of, so here's some additional information on the child tax credit. So there we have it. There's a high-level overview of the major write-offs and credits for your 2025 tax return. which is due by April 15th, 2026. If you found this video helpful, consider sharing it with a friend or family member. You never know who might be able to lower their tax bill. Thanks for watching, and I'll see you in the next one. Take care.